iPhone sales, that is over half of Apple's revenue, have plummeted by 10% year over year. Is now the time to sell Apple stock? It just took a 4% nosedive, but here's the real shocker. Let's dive into what's really happening with this tech giant and what it means for your investments. What we'll talk about next could save you from a costly mistake. Hey everyone, welcome back to the channel. Before we start, make sure to subscribe and hit that notification bell so you don't miss out on more stock market insights and strategies. We all know Apple has been a powerhouse for investors with their revolutionary products, unbeatable brand, and rock-solid financials. But with some recent disruptions, is it still the safest bet for your portfolio? We'll uncover whether now's the time to buy Apple stock or if holding on could be a costly mistake. What we reveal might change your entire investment strategy. Apple Inc., company behind the iPhone, Mac, and a fast-growing services division, has dominated the tech market for years. But recent challenges, from legal battles to shifting consumer preferences, have shaken the company's once unshakable reputation. Let's start with the numbers. Recently, Apple's stock took a 4% hit, largely due to concerns about demand for the iPhone 16. In the last quarter, iPhone sales dropped 10% year over year, coming in at $45.7 billion, the biggest fall since the early days of COVID-19. On the flip side, Apple services revenue reached an all-time high of $24.2 billion, up 14% from the previous year. But don't get the wrong idea. There are still red flags. Analysts predict Apple's overall revenue will climb to a record high in 2024, potentially reaching $390 billion. But is that enough to justify the current price? Now let's take a deeper look at the risks. First up is the iPhone market saturation. In key markets like China, Apple is struggling to maintain its dominance. On top of that, there's the mounting regulatory scrutiny, with lawsuits in both the US and Europe challenging the company's App Store practices. If Apple loses these battles, it could seriously impact their services business, currently a major source of their growth. And there's another concern, Apple's innovation pipeline. Critics argue that Apple hasn't launched a truly game-changing product since the Apple Watch in 2015. In the race toward AI, Apple has been surprisingly quiet, while other tech giants like Microsoft and Nvidia are making ambitious steps. The differences in AI strategy are obvious. When we put Apple side by side with competitors like Microsoft and Nvidia are pushing the envelope in AI and machine learning, potentially offering much more growth potential than Apple in the current market. On top of that, new entrants in the smartphone space are challenging Apple with better features at more affordable prices. As someone who's followed Apple closely for years, I've seen the company approach challenges without hesitation. But right now, the combination of iPhone saturation, legal pressure, and a lack of new innovation presents a unique set of challenges that even the world's most valuable company will struggle with. While Apple is still a dominant player with a loyal customer base, the risks surrounding it today suggest that buying its stock may not be the safe bet it once was. If you're looking for high growth potential or you're worried about regulatory issues, it might be worth considering other options in the tech sector. Is Apple still a buy, or are you exploring other tech giants like Microsoft or Nvidia? If you're curious how those companies stack up in today's market, check out my in-depth analysis on Microsoft and Nvidia in the video I've already made. Just click the cards here in the video. And if this analysis helped you out, make sure to check our post in the blog about Apple's stock dip and their challenges and opportunities. Also, don't forget to hit the subscribe button and turn on notifications for more insights into tech stocks and market trends. See you in the next video.